Hey everyone, welcome back to Corporate Decoder, the place where we dive into the nitty-gritty of corporate filings to uncover the juicy secrets you won't find in the press releases. Today we are looking at Equity Bancshares Incorporated EQBK, and they have some notes for us. Have you ever wondered what a company does when it wants to buy back its own stock? Well, Equity Bancshares Incorporated is giving us a peek behind the curtain today. So what does this mean in plain English? Equity Bancshares Incorporated, the company itself, is planning to buy back a large chunk of its own stock, up to 1 million shares. This is a pretty common move for companies. Think of it like this: if you have a popular toy and you know it's going to be valuable, later you might buy some back from the market to hold on to for yourself. This often signals that the company believes its stock is undervalued, meaning they think it's worth more than what the market is currently paying for it. It can also help boost the stock price because there will be fewer shares available for people to buy. This plan is set to start soon in October and will run for about a year. But here is the key part: the repurchase program does not obligate Equity to acquire a specific dollar amount or number of shares, and it may be extended, modified, or discontinued at any time without notice. This is important because it gives the company a lot of flexibility. They are not forced to buy all 1 million shares. They can stop or change the plan whenever they want based on market conditions or their own financial situation. And the icing on the cake is that they got the all clear from the Federal Reserve Bank of Kansas City. This is a big deal. It means that the big financial regulators are aware of and are okay with this plan. It basically validates their decision and shows that they are following the rules. Now you might be asking, why do companies do this? Well, besides the belief that their stock is a good investment, buying back shares can have a few effects. For existing shareholders, it can potentially increase the earnings per share because the total profits are now divided among fewer shares. This can make the stock look more attractive. It can also be a way to return value to shareholders without issuing dividends, which are taxed differently. However, there are also risks. If the company buys back shares at too high a price, they could be essentially throwing money away. And if the market conditions change drastically, they might regret not having that cash for other investments or to weather a storm. In the context of Equity Bancshares Incorporated, this repurchase plan is likely a strategic move to manage its capital efficiently and signal confidence in its future prospects. It shows they are actively managing their share structure. Now let's look at the broader picture of where Equity Bancshares Incorporated stands. They are what we call a publicly traded company, which means anyone can buy a piece of it through its stock, which trades on the New York Stock Exchange under the ticker symbol EQBK. Their class of common stock is what most investors would deal with. Let's quickly touch upon their operational base. They are incorporated in Kansas, and their principal executive offices are in Wichita, Kansas. This gives you a sense of their geographical roots. Thinking about the direction of Equity Bancshares Incorporated, based on this filing, it appears they are focused on shareholder value and managing their capital proactively. The approval from the Federal Reserve suggests a stable and well-considered approach to their financial strategies. They are not just buying back stock blindly, they have received regulatory approval. This indicates a level of maturity and cautious optimism within the company. A notable risk for any company in the financial sector is always the regulatory environment. While they received non-objection here, future regulations could always pose challenges. Another potential opportunity or risk is how the market actually reacts to this buyback. Will it boost their stock price as intended, or will investors be looking for other indicators of growth? In conclusion, Equity Bancshares Incorporated is making a strategic move with its share repurchase plan. It signals confidence in their own stock and provides them with flexibility in managing their capital. With regulatory approval in hand, they appear to be on solid ground for this particular initiative. What do you think about companies buying back their own stock? Is it a sign of strength or a missed opportunity for investment elsewhere? Let us know your thoughts in the comments below. If you found this breakdown helpful, give this video a big thumbs up and subscribe to Corporate Decoder for more insights into the world of corporate finance. Don't forget to join our Discord community linked in the description for more in-depth discussions. Thanks for watching, and we will see you in the next episode.